Hi there, this is Parag here again from the Facebook group and social media platform for all PAYE workers to ask and get answers to their questions. The group is called Payroll Matters in Ireland and new members are always welcome. Today I want to talk to you about what you can do when you are changing jobs. When you leave a job, your employer will let Revenue know that you have finished. They will do this by including a date of leaving on your final payroll submission. You will no longer receive a P45 from your employer. Since the 1st of January 2019, employers are no longer required to issue a P45 cessation cert to an employee and submit the P45 Part 1 to Revenue. Instead, an employee's leave date is reported to Revenue in the final payroll submission made for employees. Employers can process a leaver on termination of employment by entering the employee's leave date as required in the field provided on their payroll system. The payroll submission for Revenue that is created will include details of the employees who are leaving and their leave dates. While it is the responsibility of employers to report employees' commencement and cessations to Revenue on the employer payroll submission, we here at Payroll Matters in Ireland recommend that you let your employer know the date of your leaving as soon as you know it. It may be no harm to also let your payroll department or the person processing your payroll know that you are leaving. The best time to do this would be a couple of days before you leave and ask them to include it in with the final payroll submission. Employers are obliged under the Income Tax Employment Regulations 2018 to notify Revenue of the date of cessation of employment of an employee no later than the date of cessation. Failure by employers to report these events to Revenue significantly affects the smooth operation of the PAYE system, and specific penalties apply to employers who fail to do so. I repeat, when an employee leaves an employment, the employer should include the date of leaving on the payroll submission for the final payment to that employee. This notifies Revenue that the employee has ceased employment. It is important that the employer includes the date of leaving on the final payment, as it ensures that when an employee commences in a new employment, all the pay, tax and universal social charge details from the 1st of January are up to date for the new employment and are included on the cumulative Revenue Payroll Notification, or RPN, that's made available by Revenue to the new employer. Where a previous employer delays in submitting the date of leaving to Revenue, Revenue will not be able to allocate tax credits and tax and USC cut-off points to the new employment, meaning that the individual will suffer an excessive tax deduction, as Revenue will only be able to make a nil RPN available. That's a Revenue Payroll Notification. It is acknowledged, however, that in the case of casual employees, that is, employees without fixed hours or attendance arrangements, employers may not know whether the employee will attend for work again. As a result, the employer may not be in a position to include the date of leaving on the final payroll submission for that employee. So to repeat, if you are in casual employment and you are leaving, we here at Payroll Matters in Ireland recommend that you let your employer know the date of your leaving as soon as you know it. It may be no harm to also let your payroll department or the person processing your payroll know that you are leaving. The best time to do this would be a couple of days before you leave and ask them to include it with the final payroll submission. In cases where casual employees do not notify employers that they are leaving, where such employees are not paid by the employer for a period of 3 months, a date of leaving should be reported by the employer to Revenue on a payroll submission for such employees immediately after 3 months has elapsed. The date of leaving should be the last day the employee worked with that employer. Where an employee transfers from one branch or geographical area to another within an organisation, like the HSE for example, that has separate registration numbers for the same employer based on geographic location, a payroll submission should be made under the employer registration number from which the employee is moving. In addition to providing the employee's pay, tax, USC, etc., a date of cessation should be entered on the payroll submission. Subsequently, a request for an RPN can be submitted under the employer registration number relating to the new employer. The new employer will receive a revenue payroll notification showing the employee's tax credits, tax and USC cut-off points, together with the employee's taxable pay and statutory deductions from the 1st of January to date. This will have the effect of creating the employment and will ensure that the correct deductions under the cumulative system continue to be made from the employee's pay. The use of separate registration numbers for separate geographical areas, such as happens with the HSE, rather than one registration number for all employees, involves extra work for the employer, as they will be making separate returns to revenue and to the Collector General. If an employee transfers from one registration number to another, a cessation date must be provided on the payroll submission under the first employer registration number. Likewise, a commencement date will need to be provided on the payroll submission under the employer registration number to which the employee is moving or transferring. As a PAYE worker, you can view your pay, income tax deductions and leaving date reported by your employer through the Manage Your Tax on Revenues My Account. To do this, sign in to My Account. For the current year, to access this information, click on Manage Your Tax link in the PAYE Services card on the My Account homepage. Click on the View link to the job or pension you wish to view. Your payroll details for the year to date will be displayed here, and start and leaving dates where appropriate. Click on the View link next to any particular payroll submission you wish to view. Where your old employer fails to let revenue know that you have finished, you can use My Account to cease your old job. Select View Cease Your Job on the PAYE Services card to do so. At Payroll Matters in Ireland, we advise that this be as a last resort after you exhaust all avenues to get your previous employer to do it, as having your old employer notifying revenue that you have ceased in their employment is the cleanest way to avoid week 1 and 00 tax credit issues going forward. When you start a new job, you need to give your personal public services number, your PPSN, to your new employer as soon as possible. Your new employer will notify revenue that you have commenced when they first request a revenue payroll notification or RPN. Revenue will issue you with a tax credit certificate and make an RPN available to your employer. Your employer can then make the correct deductions from your salary. If you do not give your new employer your PPSN number, you may pay too much tax. Your employer will be required to deduct emergency tax from your pay. Please note that there are other factors relating to the transfer of tax details that need to be considered when changing jobs. The payment schedules of the companies from which you are leaving and to which you are going. Your date of leaving within those schedules is also an important factor in determining how smooth your transition will be from a tax and PAYE perspective. While some companies pay their employees on a current basis, more often than not, PAYE workers are paid in arrears. This can be a week in arrears, where some employees call this a line week. The number of days in arrears differs among companies. In the example I am going to demonstrate here, it is inevitable that a person changing jobs from one company to the other will pay emergency tax for at least one pay period in the new company and possibly two, depending on their day of leaving within the pay schedule. John is leaving his job in what we will call the old company. The wages in the old company John is leaving is paid 11 days in arrears, with the working week running from Monday to Sunday, with pay date on the following Thursday week. John is getting a new job and joining what we will call the new company. The wages in the new company John is joining is paid 5 days in arrears, with the payment week running from Friday to Thursday, with pay date on the following Tuesday. Here is what the wages or pay schedule looks like in both the companies. Remember that this is just an example to demonstrate that in some cases employees will be on emergency tax when they change job, and this is inevitable. We can see here the dates paid from and to in each company and the pay date relating to the dates the work was done. This example is taken from January 2024. When we look a little closer, we will see that in all cases the first pay date in the new company happens before the last pay date in the old company. The difference is either 2 days or 9 days. As a consequence of this, the old company will not have been able to give revenue the total pay and tax details prior to the first pay date in the new company. So it is inevitable that the employee will pay emergency tax for at least 1 week and maybe 2 and possibly 3 weeks. In this example, this will happen even when the old company notifies revenue when they are supposed to, and the new company has your PPS number. You can see all the scenarios in this table. The time lag, the first payment in the new company and the last payment in the old company. Please be aware that the opposite scenario can also apply where an employee is moving from being paid 11 days in arrears to 5 days in arrears, where it is likely that they will not be taxed at emergency in the new job, and if they are, it will be for no more than a week. When people enter a leaving date themselves and they have not received their final payment, then they may be overtaxed in the last payment of the jobs they are leaving and also in their new job. In brief, this entails if you change jobs, your old employer will notify revenue that you have left by including your leaving date on the final payroll submission, and your new employer will notify revenue that you have commenced working with them through their payroll process. You should only cease your old job on revenue when you have exhausted all other channels to get your employer to do it. If your old employer still fails to notify revenue that you have finished, you can cease your old job by signing into my account and clicking View Cease Your Job Details in the PAYE Services tab. Don't forget to hit that subscribe button to keep up to date with payroll matters in Ireland. Thank you for watching and see you next time.